In this video, I'll go through my entire portfolio and reveal its performance over the last year and since I started way back in 2009. I'll also reveal what I've been buying and selling and my plans for 2024. Over the last 14 years, I've been investing mainly in large cap UK companies, which I hold for the long term. In recent years, I've added several exchange traded funds to increase diversification and reduce risk. I make good use of a stocks and shares ISA using the Barclays Smart Investor platform, so I don't have to pay dividend or capital gains tax. I'll go through each sector in ascending order of performance for the year. This is not investment advice, I'm simply showing you my own journey. In the chemical sector, I only have one company, CROA, and it's had a pretty disastrous year. As I go through the slides, this figure shows the average price change in 2023 for the companies I have in a given sector. It's only based on the companies I hold and not the industry as a whole. This figure shows the value of my current holding. This figure shows how the price has changed this year. And because CROA is the only company I hold in the chemical sector, it will be the same as the figure at the top. And finally, here is the dividend yield. I have £8,322 invested in CROA, so I would currently expect to receive dividends of around £175 a year. Although the share price is down considerably this year, I still think CROA offers long-term value, and in recent weeks the share price has been on the rise. In the food and tobacco sector, I have three companies. British American Tobacco and Imperial Brands pay very large dividends, but the share price is down heavily this year. Tobacco is in a declining industry with heavy taxation, and these companies will need to speed up their transition into next-gen products if they are to prosper. In food, Tate & Lyle has fared a little better, but it is still negative for the year. In the consumer goods sector, I have three companies. Diageo and Unilever have strong brands and powerful economic moats. Over the long term, they should do well, but Diageo in particular has had a tough year, down over 20%, mainly because of a profits warning as a result of customers in Latin America and the Caribbean consuming less alcohol and seeking cheaper brands. The third company, Haleon, which was spun off from GSK in 2022, is relatively unchanged. It could perhaps be a takeover target in the future, so I'm happy to hold for the long term. Next is the renewable energy sector, and I have three companies. Bluefield specialise in solar energy and Greencoat in wind energy. Both are down this year despite relatively high dividends. The third company is the Renewables Infrastructure Group, which has a mixture of solar and wind energy assets. In the pharmaceutical sector, I have two companies which I've held for over a decade. The sector is down around 4% on the year, with GSK the slightly better performer. AstraZeneca is now the UK's second largest listed company, having recently lost the title to Shell. In the insurance sector, I have only one company, Aviva, and it's down slightly this year. The dividend is high at 7.3%. Aviva is a more streamlined and focused business these days, and I'm confident it will do well over the long term and continue to churn out decent dividends. In the mining sector, I only have one company, Rio Tinto. The share price is almost unchanged over the year, but in the last 6 months the shares have risen nearly 18%. One to watch perhaps in 2024. Next is an exchange traded fund. This one has the ticker code VHYL. The share price is more or less unchanged over the year. The yield is 3.5% and you get exposure to over 1,800 mid to large cap companies from around the world, which pay higher dividends. Here are some of the largest ones you would own. In the oil and gas sector, I have two companies, BP and Shell. BP is down nearly 4% over the year, while Shell, the UK's largest listed company, has risen 8%. Both pay decent dividends. Another ETF now, and this one has the ticker code ISF and simply tracks the FTSE 100. It's up slightly on the year and pays a dividend of 4.1%. Here are the top companies you would own. It's weighted by capitalisation, so although you would have exposure to all 100 companies, 9% would be in Shell. In the banking sector, I have three companies. Overall, the banks are up nearly 5% on average, but very mixed fortunes for these two. Barclays is showing a loss, yet HSBC is up 19% over the year. Dividends are good. The third company, Lloyds, is more or less unchanged in 2023. Now for the utilities sector, and I own three companies. Both National Grid and SSE are showing reasonable gains this year and the dividends are good. The water provider United Utilities is also up on the year. For me, the utilities seem to churn out reliable dividends as well as give some capital growth on top. Now, how about a new energy provider for the new year? I've used Octopus Energy for over 2 years, and if you sign up using the link in the video description, we could both get £50 of credit. Now back to the portfolio and the brokerage sector. I have 2 companies here, IG Group and a new addition, the London Stock Exchange Group. It will be interesting to see how this one performs next year and if it continues its impressive run. Next is my S&P 500 ETF, and what a year it's had, up over 18%. You get exposure to 500 largest US companies in just a single share. The ongoing charges are incredibly low at 0.07%, and there is even a small dividend spread over 4 payments a year. In the retail sector, I have just one company, Tesco, and it's had a great year, up over 26%. This retailer is now on the recovery after some difficult years in the past. The second highest sector has been information technology. RELX is up nearly 35% on the year, but as I've only recently bought shares in the company, I've not enjoyed much of the ride. It will be interesting to see what happens next year. My best performing sector of all is defence and aerospace, up almost 115%. BAE Systems is up 28% as companies around the world have boosted their defences, and Rolls-Royce is up an incredible 200% as we all return to the skies. I only invested £11,000 in Rolls-Royce a couple of years ago, and it's now worth nearly 3 times that amount and has become the largest holding in my entire portfolio. Now for all my buys and sells in 2023, and all I ask in return is a quick tap of that like button, as it really helps out the channel. With the portfolio now paying out an average of over £1,200 a month in dividends, I don't always have to put new money in to buy more shares. Here are all the net trades I've made throughout 2023. I've put more money into my S&P 500 ETF than any other share. I buy it when I fill up my ISA. I can keep it outside as it only has a very low dividend yield. Regarding individual companies, I've put more into Diageo, as I think it will do well in the long term, so I've been loading up with it while the price is low. So my intention for next year is to carry on putting a significant amount of new money into my ETFs, but I will of course buy more shares in my favourite companies if they suffer a significant fall. At the bottom right of the table, you can see I've sold a few oil shares to rebalance the portfolio. Oil has done very well over the last couple of years, and it was starting to dominate the portfolio. To see what I buy and sell each month, then subscribe to the channel, it's free. Cash in the portfolio currently stands at £1,829. Now for the portfolio performance this year. At the end of 2022, the portfolio stood at $359,000, and at the end of 2023, the portfolio stands at $415,000. £22,000 of new money has gone in, giving me a net gain in value of £34,624. The percentage net gain for the year is 9.6%. I'm now going to compare the performance of the portfolio this year with other indices. To do this fairly, I'm going to strip out any dividends I've received throughout the year. With dividend payments ignored, the net capital gain is 5.4% for 2023. You can see in this table that the portfolio has outperformed the FTSE 100, 250 and the FTSE All-Share Index. But it's performed poorly against the S&P 500 and All World Index. As you saw earlier, I'm now putting more into the S&P 500 than any other share, and I'll continue to do so going forward. Now for my overall performance since I started in 2009. I made plenty of mistakes in the early days as I was learning, and these results include everything. The total amount I've put into the platform is 247k, but remember I didn't put this all in at the start in one lump sum. I simply drip fed in spare money each month. If I had been able to put all this money in right at the start, my gains would have been much greater, and of course I would have done better if I had invested into an index tracking ETF right from the start. But they were not mainstream back then, and I was limited to buying individual UK companies on my Barclays platform. As you have seen, the value of the portfolio stands at 415k, giving me a net gain of 168,000 or 68.4%. Many investors will have done much better than this, of course, and I'm just showing you my own journey. Now, in addition to my share portfolio, I also have the full amount of premium bonds, and in terms of prizes won, it's been my best year ever. To see how much I've won in 2023, then click this video here.